there something that I am missing, which explains why people are taking your stock down 17, 18%, when it to me looks like this is a rather just typical good Salesforce quarter?
Jim, this has been an amazing year for us. We've completely transformed the financials of the company, and you can see that we're, delivering, as I said, this incredible cash flow and margin number. So, look, I can't predict what the stock market does. You know that. Right. We've been through this how many times over a couple, I guess I've been doing this 25 years. But what I can tell you is that the most important thing remains the customer success.
That was Salesforce CEO Mark Benioff speaking to Jim Cramer last night on Mad Money. Shares of the Dow component are down 16% this morning. That's putting some major pressure on the Dow. You can see the Dow right now indicated off by 335 points. Joining us right now with a closer look at the quarter and the guidance that the company is giving for the current quarter is Brian Schwartz. He's senior analyst and managing director for Oppenheimer. And Brian, you in a note are calling these results disappointing. I think the street's reaction is more than disappointing on this. I know you've got a 12 to 18-month price target of $280 and an outperform rating. What do you think when you see, A, the results, and B, the market reaction?
Yeah, first, thanks for having me on your show, Becky. And starting with the market reaction, I've covered Salesforce for 20 years. This is one of the largest one-day drops that I've seen in my career in following the name. I'd attribute the disappointment in the quarter to five things. First is macro, the first three, that Salesforce is in a bad neighborhood right now. The demand for front office software is not the priority. It's really upon rationalizing your IT stack and costs. So that's number one. Number two, we'd seen weakness in the SMB market earlier this year. Also in the consumer. Now it looks like it's starting to penetrate the enterprise market. Number three, there's been less hiring. You can see that in the non-farm payrolls, so less software investment if you have less people. Number four is internal with Salesforce. I'm sure there was some distraction. There was rumors on them trying to fill a hole in their data management products with Informatica. And number five, which is probably the newest development, I think the read-through from this, it looks like investments in AI is crowding out investments in software these days.
Yeah, that's an interesting and concerning point for lots of software companies. But Salesforce is saying that they've got these AI offerings that are going to be on the way, maybe not till 25 or 26 until you really see it. Is that something that you think will eventually help them, or is it going to come too late?
Over time, it should help them. The size and depth of the data that's on Salesforce's platform. Eventually, there should be a bigger monetization path. But right now, when I say that AI is crowding out investments in software, when we talk to customers, we don't hear about a new line item in the budget for AI. It's coming out of somewhere, and it looks like it's coming out of the software budget. And if you're an investor, and what investors are trying to better understand right now in software is which software businesses' moats are going to be defensible and which are not in AI. And that's leading to a revaluation of the whole sector, and it's compressing multiples.
It sounds like you are reevaluating potentially your $280 price target, your outperform, and maybe not thinking that this is an overreaction from the street.
That is correct. I mean, if I look at the bookings metrics for Salesforce, it grew 2% in Q1. That's the slowest I've seen since I've been following the company. I'd have to go back to the Great Recession. And then they're guiding for only 6% bookings growth in next quarter. That to me indicates that Salesforce is shedding market share right now.
You called it disappointing, and the president of the company, not Benioff, but the president said elongated deal cycles, deal compression, and high levels of budget scrutiny. So it was disappointing, right? When CEOs, I guess they're perennial cheerleaders, they say, we just mind our P's and Q's. We don't know what the stock market's going to do. I have no idea why my stock. He knows why it's down 16%, doesn't he, Brian? And maybe he's right. Long-term, AI might be the tailwind, and they got to, this is near-term. There'll be great promise in the future. But I never hear a CEO who doesn't say that. I don't, the daily vicissitudes of the market, I can't control that, but we're just, would you prefer to hear, yeah, it was disappointing, we're working on it?
Yeah, I would. I agree with you, Joe. We're seeing it on other software names, enterprise companies. We saw it with Workday. We saw it with UiPath. You're seeing it with Salesforce. And look, there's still a bull case here, for software this year. I think the biggest hope is not AI, but that this demand weakness somehow gets pushed out to the second half of the year, and we get a seasonally strong second half. And, businesses' bookings can get back on track. But, yeah, investors are smarter than that. They can read through. They can see this low single-digit bookings growth and know that, something is wrong with the deal activity in the spending environment with Salesforce and likely with software in general.